Hey everybody, this is Kimberly Swartz, and this is the February 22nd edition of the Hammer Report video. And I just decided to sit down on this cold, wintry night with the captain.
Ooh.
Oh, ooh.
Ooh.
Would you like to introduce yourself, Captain?
No, I'll let you do it.
Okay. You all know him as Captain John. This is John Bukowski, and I'm Kimberly Swartz. We're partners at captainjohncharts, and we thought we'd sit down and show you a few things we noticed that don't look too pretty about the SPX. Do they, John?
Not particularly. So why don't you start it off, Kim?
Okay, well, I've taken the liberty of drawing a thick trend line from 2009 lows all the way to where we broke through and broke under that line. Now that was right about the time in the summer where we started noticing the funnel.
The funnel?
Yes.
You're talking about fewer and fewer stocks participating in the rally
Yes.
that we had to new highs.
It was a vortex of pain that was about to come.
Well, it was a vortex. I mean, any time that you have fewer and fewer stocks participating, it's a warning sign that eventually the troops are leaving and the generals are leading.
Right.
And so you got one group, you got the masses leading, the generals leading, and it's usually a precursor to trouble ahead. So we saw fewer and fewer ideas working. There were ideas working through the end of the year, but fewer and fewer of them. We actually posted fewer and fewer ideas, only because there were fewer and fewer ideas on the long side and more on the short side. So
Right about
anyway,
here, June, July.
Yep. So
July.
Exactly. Yeah, it was midsummer. I don't know exact dates when it started, but yeah, there were fewer and fewer stocks making new highs. There were more and more stocks making new lows. The advanced decline line rolled over, and it certainly was a tell. Now, the advanced decline line, when that rolls over, from my experience, it usually happens well ahead of time. It does not mean it's the end of the world next week, next month. It sometimes takes months and months and months to propagate into the major indices like the Dow and the S&P and so forth and so on. So anyway.
Let me show you what I see. All right, first of all, left shoulder, little head, right shoulder. So there's a little mini head and shoulders going on.
Yep.
And that still hasn't resolved.
No, it hasn't. But, well, it looks like it might be starting to break down. But if you look...
But it hasn't completed all of its down move.
No. Not even close.
Right.
So, but if you take a step back further on that weekly chart and you look at what could potentially be a left shoulder over here.
Okay, let me draw this out, but I need a thicker line.
Why are you always looking for thicker things? Do you have a thing with thickness?
Okay, so I'm going to draw you this left shoulder.
Yep. There you go.
Very rudimentary without my coding. Usually I like to draw with code.
That's why your new nickname is Cody Burner.
You were going to tell them, weren't you?
I was.
Okay, here's a massive head.
Yep. And then you got a larger degree. Yeah, right there. Right shoulder. So
there we go. Okay. I realize this is like caveman art.
It does look like caveman art, by the way.
It's cave woman.
So why'd you pick orange?
Caution.
Oh, Jesus.
She's about to give birth.
Oh, my God. Well,
she's in transition.
Well, you've got a baby head and shoulder inside of a larger degree head and shoulder. So
well, there
maybe,
you are.
So, all right, there you go. All right, so what I see is a larger degree, longer term head and shoulder, possible top with a break of the neckline, which you've thankfully drawn oh, well, you had the blue line up, you just got rid of it.
I did.
But if you put that line back up again,
I will.
you can see,
fresh.
yeah, make a fresh one. You see that? No, just draw it off.
Let's start from here.
Start from the low. Yep. And then go across from that low. Yep,
and
perfect.
Look at where that meets.
Now,
ooh.
That to me looks like, a decent place. I mean, you can draw lines anywhere you want to, but that looks to me on a closing basis on the weekly chart, that looks like a great place for the neckline to be. And what happened this week is you had a rally back up to the neckline. That is not unusual for head and shoulder. Almost, it's actually, it happens more often than not that the neckline does get tested by a retracement back up. Some will argue that there's a double bottom in place here. Well, it could be. We'll see. But it so far has not been proven because it has not been able to, in my mind at least, get above the neckline. It has to clear the neckline for that double bottom that you see right there to be intact. So
that's what I call it.
Oh yeah, it goes up. It goes up and kisses the neckline. Yes, that's very.
Goodbye, lover.
Oh, goodbye. Are you giving me a kiss goodbye?
No. So
oftentimes the asset that you're looking at, or the stock, or whatever it is, whatever the investment is, when you see a head and shoulder top, it will come back and it will move up against the neckline before continuing its downtrend. Now, interesting thing is if you take a measure from the top of the head to the neckline, that implies a move at a minimum to the 1575, 1600 area. And again, that's just a minimum. Doesn't mean it's going to happen, because we could certainly blow right back up through the neckline and things could get bullish again. But that's something you certainly have to consider as a warning sign, especially with, now, I will say this, breadth has improved in this recent bounce that we've had in the market. The advanced decline line has improved to a certain degree, but
there's 1575 right there.
Right, and we do know that sentiment has gotten extremely negative, and that's probably been supportive of why we've had somewhat of a bounce. But in the context of the larger term, looking at a weekly, looking at a monthly, we are not out of the woods by any stretch of the imagination here. So I expect, unless things change, that we probably will at some point, and it's not going to happen tomorrow or next week probably, or next month. I think eventually we're going to work ourselves down with a pretty high probability to that 5075, 1600 area. So anyway, that's our technical take. I mean, and that's what we do. We look at the charts and that's what we go with. So,
well, what we're going to be doing is we're going to be taking a much closer look deep inside in the Hammer report and detailing for you the technical details and laying out in the videos what we see, where we see it, and how we see it from a technical perspective that all technical chart lovers like us would just appreciate. And even if you're not specifically skilled in the chart reading, you will be after you see the Hammer report. This is not just throw the fish. This is also something you can serve as an education of sorts into chart reading. It's a fascinating study. I highly encourage people to take part in. But in the Hammer report, it's going to be our weekly subscription. We have our buttons up now. We are open for business, and we look forward to serving our subscribers. We love to eat, and so do you, and we don't eat unless you eat. So there you are.
Yeah, so what we're going to do to start off with is do a scan of all the S&P 500 components, and then just identify those that have actionable great risk reward entries, whether it be on the long side or the short side. And it might be 10 ideas one week, it might be 20 the next, or 30 the next, who knows. That all depends on the market, but we will highlight and also try to have some fun with them and show you setups that we've been pretty good at in the past. So we're going to start with that, and that will be something that will be available to you, and it will be updated once a week. And then as time goes on, we'll be adding other things. We'll be adding other investments to the different subscriptions that we offer. But anyway, it's a good place to start. It at least will tell you what our thoughts are on the overall market, and then what you can do inside the market. And there are plenty of things right now, even if the market does continue to roll over, as we think it probably will over the next months, we will be including ideas that some of these stocks and investments have already gone through a bear market, and in some cases been obliterated. So there may be some ideas that may not be showing great relative strength longer term, but have just gotten so beat up, and they have met support levels, and there are some bullish divergences and things like that we think we can take an action on the long side, and then there will be other ideas on the short side, as well as when we find them, some pair trades where you can hedge yourself and get long one investment and get short the other.
Okay, everybody, that's it for this week's Hammer Report video brief. Thank you so much for visiting with us at Captain John Charts. John and I really look forward to spending time with you again next week with another Hammer video. For more charts and blog, minus that cowbell, see us at captainjohncharts.com and captainjohncharts.com/The Hammer Report. Don't forget to hit that subscription button. If you subscribe, you then are eligible to get all the access that you need to all that premium content. We are extremely social. You can visit both John and I on Twitter and StockTwits. Our content is viewed by multiple financial institutions around the world. And that's just about all for this cold and wintry Friday night in Detroit. And as typical in Detroit, I'd love to give a shout out to Benzinga. Thank you so much for making us a featured contributor. All right, everybody, you have a great night and a greater weekend. Bye.